up if you would, Nancy, please. All right, Bannock County Commissioners are back in session. Please introduce yourselves on the record and let's talk about our financials.
I'm Fred Goodworth. I'm a partner at WIPFLI, a CPA firm.
I'm Teresa Flannery. I'm a senior manager working under him.
Okay.
Not under with me, she works with me. So, well, we appreciate the opportunity to come and visit with you today and present the results of the audit. One of the biggest results, obviously, is the annual comprehensive financial report that's prepared by your staff. And then we have just a couple pieces that belong to us in this, which is our opinion on the financial. And then we give there's also opinion, or actually a report on internal controls, because it's a governmental entity at the back. So those are really the only two things that belong to us. But we truly appreciate the opportunity to work with the county and the associates here. Probably I'll tackle this in 3 different segments, if that's okay. First, I wanted to kind of talk about some of the challenges that we face this year, and then we'll jump into the actual annual, kind of go through a high level of the, some of the financial results for the year. And when I say for the year, we're talking September 30, 2022, that we're finished up. And then the third part, I thought we'd talk a little bit about the year that you just finished up, September 2023, and the proposal going forward. Does that sound okay? And obviously, if there's questions, we're happy to answer questions as we go along.
You two, come on up here. There's no reason to sit back there.
Come join us. So, we're just barely past your next fiscal year, and we're reporting on a full year ago. So let's talk about some of the challenges that had to be overcome to get to where we're at today, because it was a challenging year. There was a number of things that your team faced and that we faced. Probably the biggest one is there change in software, right?
Turnover.
Yeah. Yeah, and part of that, with the new software that they implemented, one of the key employees, right, that was helping with the implementation of the new software decided to leave, so the turnover issues. So, there's been some challenges from that perspective, and that took a lot of it. That took some time and challenges, but we've overcome that, right? So we're here, we're done with that. And then also there's new accounting standards. There was a big effect on the new lease accounting standards, and the county was proactive in getting a firm to help with that implementation, but it still took time. There's a lot of challenges going back and forth and getting that. And then even once they presented stuff, we had to look at it and say, okay, there's some things that needed tweaked and some updates and corrections to some of those things, and had to go back and forth on those new lease standards. So Teresa, I'm going to have her go through the financial results, but we were able to get through that. But that was there was a big, because there's a number of leases here at the county that had to be analyzed and looked at and make sure they're reported in accordance with the new accounting standard. So that was, those 2 were probably the biggest. With the turnover, I guess that could be 3 as a separate one. But and then obviously there's always things that come up on personal issues, and we know some of the challenges that we face that way with your here at the county. So, but happy to report that even though we were able to overcome those challenges, but just so you know, there were some big challenges this year, and we still have a nice product here at the end. So I'm going to let Teresa tackle the second portion of this, which is going over a kind of a summary of the financial results, and then jump in, Christy or Jason, if you have comments on this too.
All right, so we'll start out. The first piece that's actually ours is the independent auditor's report. This is page 9 of the report, which is probably 10 or 15 pages actually in.
That's your first group
The
section.
first financial page up, financial section.
Yep, so this is our audit report, and they kind of changed the format a little bit from the last one that you saw. They put the opinion up at the top this time so that you can get the information right away that really is impactful. And we do not feel that there were any issues, materially speaking, with financial statements, that they were presented materially correct in all respects. So that is the highest answer, the best score you can get on this report. So one down. And then I'm going to kind of jump back and forth into some of the budgets, some of the note disclosures as we go through the financials. So we'll kind of jump back and forth, and I'll give you time to do that. But a couple of the things I wanted to point out in the ND&A, which is right after that. But if you turn over to page 14, the ND&A is nice because it gives kind of a comparative look, which the financial statements in most governments don't. Most governments are just 1 year, and so this lets us look back and kind of see side by side how the county was doing in 21 versus 22. And a couple things I just wanted to point out off of this is your unrestricted for both governmental activities and business activities is positive. Sometimes that goes negative because of all the amounts tied up in fixed assets. And so the fact that those are positive and those are strong positive numbers for your governmental funds, that's a good thing. And then the other thing I wanted to point out, if you look at that unrestricted number on the business activities, it looks like it's quite a bit of a decrease. But if you look right above that where your net investment in capital assets is, you actually put a lot of money into capital assets in the year. And so that decrease is more, the overall net change is positive. It's just an increase in one spot and a decrease in another. So I wanted to point that out and make sure that's clear. Any other thoughts, comments, Fred?
I guess the only thought is that's really high level. I mean, you're talking net position from a governmental standpoint of, almost $68 million. I mean, that's really high level. Let's put everything together on a full accrual basis. Really the meat of how the county operates is really in your funds. And so this is a good indicator. It's required to have the combined piece here, and the reports of full accrual, which includes your PERSI obligations and all those other, all your lease, debt with leases and so forth. But it's really high level, and so one of the keys that Teresa pointed out is just kind of watching that over time and the trend over time. It gives you kind of a good indicator on overall health of the county. But you're sitting at a very positive, healthy net position, so no concerns there.
And then breaking that down into more detail on page 21, just about 4 or 5 pages forward. This kind of gives you the granular level on where those numbers are coming from. And there was a couple things I wanted to point out on this. He talked about the lease change standards, and so there are some presentation differences from what you saw last year. The biggest one is what we call the right of use asset, and then in your long-term liabilities, there's quite a bit of a change too, and we'll jump over to the note disclosure for that. But what that right of use asset is, so in the lease standard, you had to take the value, the net present value, right, a calculation of all the future payments that you were going to be making on all of your open leases, and then you back into a number, and that represents the value of the assets that are being leased, whether it's land, vehicles, whatever it might be. And so that value is put into that right of use asset, and that's a net number with accumulated amortization over time. So that's kind of how you get back down to that zero. As you pay that lease off, both of those numbers kind of just drop together. And so there's not a huge impact on your net, your changes in net position. It mostly is right here in your balance sheet, so that's where you see most of those changes.
Yeah, so if we were to compare to a year ago, this is the new standard that we talked about, the new lease standard. So now it's saying, even if it's an operating lease, previously you didn't record it as an asset and a liability, you just recorded the expense as you paid it. Now, under the new standard, you capitalize that, you book an asset on, and depreciate that asset on your books. So between governmental and business, you're 1.3 million net of amortization, your asset. And then the lease liability is buried, but it's similar to that number. I mean, it's going to be slightly different than that, but it's buried back in the footnotes.
Yep.
But that's a new debt that shows up on your financial statements as a result of the new standard.
And I was just going to point that out. It's on page 48 is where we've got that breakout, so you can kind of see. And there's actually 2 pieces to this, which is also part of the standard. So the way that the standard did before, we had 2 different types of leases. You had a capital lease, and that was for just a capital piece of equipment. And that would usually go on your balance sheet as a liability and as an asset. But the operating side, if it was like a vehicle for a sheriff's office that's gonna be used and then given back, you're never actually gonna own it, that would be an operating lease, and that would just flow through your expenditures. So the change in this is everything got pulled up to your balance sheet. And then they made further clarification and said on 48, you've got a line that says lease liability, and then right below that, you've got a line that says finance purchases. So what they said is all those capital leases where in the end, you're gonna walk away with the asset, we want you to treat those like pure debt. So we want you to treat it like a note instead of a lease liability. And so they further broke out kind of how that liability was gonna go on your books. And so that's what those two pieces are. You've got the lease liability and then the finance purchases. And there was a slight change, was that, no. You didn't have a change, right, in fixed assets, or in net position beginning of the year?
No.
No, okay. Some governments had to because of that change with the finance purchases. We had some depreciation and some stuff that needed to be reconciled and pulled back into last year. So there was more complexity in some governments, but you guys got away with just the easy one, so that's nice.
We'll take it.
Yeah, that looks easy.
Yeah.
You make it all look easy.
And so if you see page 48 where we have kind of totals, if you look over at page 47, she has the breakdown of what makes up those leases, and you can see how many there are. And this is not all of them, because what you adopted a policy that allowed you to say, look, if we have small stuff, copier leases or just little stuff, we don't care. And they're not big enough to have impact on your financial statements and what financial statement users are going to see. So we're not going to include those in these calculations because there is quite a bit of a burden in having these calculations done and updating these calculations every year. So there are even more than what are shown here that had to be analyzed and gone through. And we also had some that were on the receivable side. So you guys leased to other organizations. And again, those ones had to be assessed, but they turned out less than your threshold. So those ones are not represented in your financial statements either because they're such small dollar amounts. So there's a lot in this one. And I just wanted to point that out because you did contract with a third party to do those, but then you also contracted with us to do a secondary analysis and kind of some cleanup and some fixing of the way that it was. And I wanted you to understand why, because it wasn't a simple task. And a lot of people to get it in the right place. So, all right.
Teresa put a ton of work into helping me with this implementation. So.
And it's similar for, your governmental entity, obviously, but on the for-profit side, there was a different standard, but it had some similarities where now if you pull up a for-profit financial statement, they're also required to look at leases and pull those on the balance sheet where previously they weren't. So you're getting hit, even though we follow a different standard setting body, you have the Governmental Accounting Standards Board that sets your accounting policies and requirements. Financial Accounting Standards Board for public entities had a similar policy for leases. So if you're to compare to others, they're kind of trending. And
So what about nonprofits?
nonprofits also had to get pulled under
They were
the new
fast.
lease standard, but they're under the Financial Accounting Standards Board. But yes,
So Board of
nonprofits
Health
are-
Trust should have to have the same type of situation.
Yeah, if they have leases, yes, they should be doing that analysis,
Okay.
and that should have been effective, in '22. Same time frame actually, pretty close to the same time frame.
Yeah.
Okay, thank you.
Yeah, you bet.
All right. So enough on that, I guess.
Enough on leases.
We'll jump to pages 24 and 25, which is looking at your fund level financial statements, which is what you're used to seeing, what you budget on. And just a couple of things I wanted to point out on this one. We have a strong unassigned fund balance in your general fund. Now, that's the only fund that can have unassigned fund balance because all of your special revenues are assumed to be restricted based on the nature of that special revenue fund. And so in your general fund, we've got that unassigned fund balance of almost $9 million, which is a pretty strong position. If we glance over at your expenditures on the very next page for the year is 19.5. And so at almost $9 million, you're just under half of a year in unrestricted, which is great. Some governments will choose to assign that and kind of plan for next year with what they have unrestricted, but you can show it assigned, you can show it unrestricted. Either way, it's available for you to be using towards your next budget year, which is great. And that's a pretty good position to be in.
Yeah, the total fund balance is the 17 million in your general fund. And you've committed, 4.8 million of that to be held as a minimum fund balance. And you've also assigned almost 3.3 million, which I presume is for the budget year that you just finished.
Yes.
So, and so the unassigned was the 9. So overall, that's a key indicator for a healthy government, is to have a strong fund balance, which you do.
Over jumping onto the grants column, which is the second to last one, there is grants received in advance of 17 million, and that is those CSLFRF funds, which is those COVID-related funds that they paid out into parts, and the county hadn't spent any. Well, it's been a very, very minimal amount up to this point. So at 9/30/22. You had 17 million left to spend, and I believe you made a dent in that during 23.
Did you spend most of that, or how much got spent in 23?
We've got a chunk spent. We're going to be definitely in a single audit situation.
Yeah.
So
I think we're at about 3 or 4 million.
Okay. So you still got a lot
If not
left
more,
to
actually,
spend.
probably more than that.
It's big discussions yet to come.
Yep.
Yeah.
We're in the middle of.
Yeah.
So those are funds, and they will require that single audit, but it's not under the uniform guidance, because luckily that's your only big federal spending is that. And so because of that, we are allowed to do a little bit of a more simplistic view, which is really nice, because it simplifies both her side and ours.
We still need to, your audit this for 23 is going to require that compliance portion, which this year didn't. But where you're spending those federal funds, we have to look at compliance over those, make sure they're allowable, spent on allowable purposes, and eligible and all that. Look at a number of criteria. But it will be more in depth. We'll have to do the compliance piece this next year.
I just saw where a grand jury just indicted a guy from Blackfoot for $900,000 in COVID funds.
Oh, really?
Misrepresentation.
Interesting.
Yeah.
Claimed every family member.
Oh. Yeah, we don't want to be there, right?
Yeah.
No.
Last thing on this page is I just did a comparison to each of the budget to actuals for them. I'm not going to make you flip over there, but they start on page 62. And your general fund expenditures were under budget. Your justice was under budget. Your road and bridge was under budget. Your ambulance was over budget by just a little bit. And then your grants was under, but mostly because it looked like you'd budgeted for those CSLFRF funds to be spent. And so it was way under budget because those are still hanging out there. So just to point out, just because sometimes when we set those budgets, it's the best guess, and so we have to go back and do that analysis and look at what happened at the end of the year to just really see, did we maintain, do we know why we went over budget? And as long as we know why, it usually that's the indicator that everything's okay. But if we don't know why, then that's a good time to dig in and just find a little bit more.
Maybe I could just make a comment on page 26 and 27. Your major funds, obviously we talked about the general fund. But, your major funds, what's defined as major under accounting reporting is your general fund, your justice fund, road, bridge, ambulance, and then the grants. And if you just look at, it's like the third row up from the bottom, the net change in fund balances. There was a relatively small decrease in the general fund. And then there was positive increases in all the other major funds. And the change in the fund balance was pretty close to a break even on the general fund even before transfers, right? And then you chose to transfer some to cover, which fund was that they transferred? Parks. But fairly strong increase in your fund balances overall in those major funds. So healthy in all those funds. All those major funds are sitting at a pretty healthy basis. Then obviously you can look at the net position, which is the bottom line number on each of those funds. So just high level, pretty strong financial position in each of those funds.
And as Teresa said, if you look at the budget to actual statements, that I think you said was about page 60, that will give you what our budgeted revenue is and then what the numbers actually came in at, and then you can see where we're at, either over or under budget on the revenues and then also on the expenditures. So that just gives you more detail for your reading pleasure.
Well, the cool thing is, you're only required to put in those budget to actuals for major funds, aside from debt service and capital projects. And so you've got those 5, but then Christie also includes budget to actuals for all of the special revenue funds pretty much as well. And so you can see really the entire county, if you wanted to look at those budget to actuals, it's all available. In the
She presents them to us.
Yeah.
Yeah, this is just prettier. You can actually read these.
So that was your governmental funds that we were looking at. So we're going to jump over to page 30 and 31, and this is your enterprise funds.
Enterprise funds, just high level again, or more like a business activity. So these are the funds that are treated more like, they're not financed through governmental property taxes. They're usually financed by charges for services and so forth. So treated more like a business activity.
And again, we have kind of those right of use assets. We have those lease things that are coming through on these ones. And so that's all there. And then the big thing that I just wanted to point out is kind of the flip over between these pages and your cash flows. Because the cash flows is really designed to give you a sense of, on a cash basis, how did we do? Did we lose or did we gain? And so here we've got your net change in net position is a positive for solid waste of $3 million, slightly negative for emergency at 165,000, and just 0 for the events. If you look at your cash flows, it's actually a small loss in solid waste, and then positive for both emergency communication and
Cash flows on page 32.
Yep, the very next page. And income or positive for both the events and the emergency fund. And so I like to just look at those and kind of keep both of those in kind of in sight as you're understanding what your funds are doing. And the big thing is that your cash flows being positive or negative is not a bad thing, as long as you know the why, right? Same as your budget to actuals. If we know why we dipped into our fund balance in a certain fund, then we're fine. It's just when we don't know why that we want to start asking a little bit more. Any questions on those? Okay. Just a couple things to point out in your note disclosures. I've got on page 39 and then on 40. This is the policy that we were talking about that the county chose to implement related to leases. So it's a very high level informational number 10 on page 39. Gives you just very high level what the standard is, what's required, and kind of how the county decided to implement that within that standard. And then a little bit of a discussion on that standard again, and 12, or actually just E on page 40. And one thing that we don't have in here, but which is important to point out, is so the lease standard hit fiscal 22. They call it the SBITA, or the subscription-based information technology arrangement standard, is going to hit fiscal 23. And it's the same thing, except for instead of leases, this is on IT contracts. So anytime you have a contract for IT software, whether it includes hardware as well or just the software piece, then it needs to come onto your balance sheet, because it's a multi-year liability that, again, they want to see. So that's going to pop onto your sheets next year as a right of use asset, as an obligation, and your liabilities will have all the fund disclosures added. So if it wasn't fun enough to do it once, we get to do it a whole nother time. It'll be great.
How many times has Adam come before us? Now you got to report all that.
Yeah, and so that was one of the things that we kind of wanted to challenge a little bit is, does it make sense to lease? You know, are you finding savings, or is there some other reason that leases are the way to go, or is that a place to potentially simplify? Anyway, that was just kind of a thought on our part.
From an accounting
honestly.
perspective, simplification means purchase,
Yeah.
You buy it, it's a one-time cost, but then you got to manage, and you still got to manage those assets. I mean, there's a whole different story from your perspective, from a management perspective versus an accounting perspective. And you need to weigh the two, what's the best cost benefit, but,
Well, we're going to report either way.
yeah.
Expenses are a lot easier to report.
So true.
A one-time expense is easier to report than reporting all the.
Yep.
Page 44, again, some additional information just due to those lease standards. So we've got now that right of use is part of your capital asset disclosure, and we have some lines that get added to show the amortization over time and the breakdown of your right of use assets. And really, we should have, I noticed that we listed it all as machinery and equipment, but you actually have some land and you have some other things. So next year, we'll have that broken out, and you'll be able to see this is how much is our right of use vehicles, this is how much is our right of use equipment, this is how much is our right of use land. So it'll match up with your other disclosure. So that is there. And then, I already talked about that one. Okay, so that was all the disclosures that I was going to go into. Most of the rest of them stayed the same. Percy is the only one that kind of did a skitty-wampus flip, and last year I think I made the joke that it was like, you know, a full moon or a solar eclipse. You don't get to see it very often, but Percy went into the positive, and so we had an asset in Percy for just 2 seconds. And so now we are back to a liability. It just flipped back to the other side and is back where it has been historically. But that's the only other big thing that changed in the financials and made a big impact on where those numbers were hitting last year to this year. So the last thing I wanted to go over, there's a lot of great information in here, but I didn't want to take your time going through your statistical stuff. So the very last piece that is ours is the last 3 pages, starting on 127. And this is our report on internal controls over financial reporting. And this is where we let you know if there's any issues. And I think we kind of started the presentation forewarning you that there would be something in this report. And so we did find that there were just difficulties with the transition into the new system. There were a lot of sub-ledgers or the underlying support didn't match up with the overall numbers. A couple of them didn't work quite like we thought it was going to, and so like AP disappeared into cash, and so we had to go find it and pull it back out. I mean, there were just fun little puzzles that you don't really want to do during your audit. So we do have a finding that's saying those kinds of things, those system tricky issues need to be fixed, and I think you're already on the mend. You're already working on that. You've got training going on. You've got people who are focused on making sure that that doesn't happen again. But because it was a big deal as far as fiscal 22 is concerned, we did include that in our report. Any questions on that?
No, I mean, you explained it and we talked about it before, but
Just one quick question. On the condition, you said improperly designed internal controls. Is that just related to this, or is there any other internal controls that you saw? If this is just the software?
Yeah, just that
transition?
the transition and everything that was, I mean, there were a lot of pieces to that puzzle. We kind of just dumped it all into one. But, you know, you've got the new payroll and the new AP and the new, I mean, everything was just new,
So the biggest part of internal control on this piece specifically is more the reconciliation, and that's a control where you're reconciling the subsidiary ledgers to the overall financials, and some of those reconciliations didn't take place timely. At least that's my understanding.
Mm-hmm.
They got through those. We got through those eventually, but we need more focus on making sure the subsidiary ledgers match in those reconciliations. So that's the internal control piece that we're specifically referencing here.
Okay.
It's not necessarily on, you know, asset custody,
Right.
separation of duties, those types of internal controls. It's specifically on some of those reconciliation controls.
Okay.
In the accounting system, if that makes sense.
Yeah, it does, thank you. And Christie does a great job with a lot of different controls, so I was just wanting to make sure that that's where I was
Yeah.
Yeah.
pointing at, so thank you.
Okay, that is it. We are grateful to work with the county. It was, they worked really hard and they got us all the information we asked for, and we weren't easy. We wanted to make sure everything was right, so we didn't give them any passes, and they gave it all to us, so. Good job.
So that's segment 2 of 3. Unless there's more questions on the financial, you know, comprehensive financial report or any of the things we talked about today.
Real quick, back on page 30, where we were showing the landfill cash flow, where does the money that we spend on remediation show up in that?
Reserves.
That's in reserves?
On page, are you talking 32? Page
Yeah, I was
32?
looking at 32.
Most
So
of our-
that doesn't show up on this one?
No.
It's
Okay.
probably that 2.9, part of that 2.9 million, isn't it? Cash payments for services and
Yes.
supplies.
So-
That's what I was wondering, if that's where that
The
was.
expense would be in there, but the actual, I was thinking literally, where does the money come from?
Oh, no, I was just looking to see
You're
where
looking where the
the,
expense, where it was,
Yeah.
where that's paid out, so,
Yes.
yeah, it's part of that, I would think it'd be part of that 2.9 million on the cash payments for services and supplies.
And then the acquisition of capital assets is the expansion.
okay, yeah, yeah,
So the 5.795 is the expansion.
yeah. I caught that one, I was just not quite sure about that one, so
Yeah,
thank
it
you.
should be in that.
Cool.
Other questions on this? Okay, so the third segment, we're gonna call forward-looking, but it's really looking back.
Forward-looking to last week.
Forward-looking to fiscal '23, right? Accountants were always behind a year, so we just finished fiscal '23, and I wanted to just kind of, have a discussion since it's that time of year. We've really enjoyed working with the county. We're gonna propose that, we'll send a proposed engagement letter to you guys again to engage us. How do I say this? We have to maintain our independence, right? We truly, as you engage us as commissioners to do an audit, we have to work as a team, with the county, and we truly look at it as, we want to be team players, and we're here to help and assist and work through issues. But we still have to maintain independence. So I just preface that. But, so we'll propose this next year because of, we'll get a proposed engagement letter sent to you, but I wanted to talk about it. We've got, looking forward, i.e. back, we have the new accounting standard that we have to implement again. And, I don't know, we probably need a little more dialogue as far as, are you going to engage the same company to look to the IT contracts as you did the lease contracts, or
Potentially, but I needed to speak with you guys because I'm not 100% comfortable with how that information is in. Part of my problem is I've gotten so busy with day-to-day stuff that for me to be able to do the work that I need to verify the numbers in lease query, I'm lacking in that. Part of that's because of the new system. Been trying to work out bugs and just find time to do everything, even with these two. I'm not sure we're going to have time, so I was going to.
So there's a couple options. I mean,
Potentially work.
you can outsource it, we can also do it, we can maintain independence and still, we don't make any management decisions on those, but we can put those schedules and analysis together. I mean, our team can and still maintain independence. So, this last year for the lease standard, you hired another firm to do that, and then we went back and forth because we challenged some of the things that they did. So you could hire us or you could hire another firm to do that, but either way, we're gonna have to audit it, when we get said and done. So we can help with the analysis, we can't make management decisions, but we can at least put that analysis together. So that's an option. We can propose that if you wanna utilize our firm.
We at least get a proposal for it.
Yeah, and that's a discussion we'll need to have. I mean, if either way, they end up auditing the other firm anyway, I mean, it doesn't make sense in part of it to pay out twice
Right.
to do the same thing. But,
Well, I mean, it'll cost you twice anyway. But the thing is, if you do use lease query, just make sure that you're only giving them the ones you want. So under your policy, you do have that threshold, and you gave them all your leases, so they put in all your leases.
Right.
So they're charging you for all your leases, even though a good chunk of them you didn't need to.
Didn't need.
So I just say watch that if you're gonna have them do it.
And to pay twice, I mean, there was some extra that we wouldn't have had had the analysis been done because of the back and forth. But, so it wouldn't have covered completely twice, but I think there was some extra that we did have costs this year that.
And
You know, so-
candidly, we've not had a new GASB implementation, or pronouncement implementation like this.
Forever.
This was just more than I could shoulder myself.
Okay.
So,
And so I don't know how many contracts are out there, but there could be quite a few.
We needed to talk.
Yeah, we'll have to.
yeah.
If there's not that many, it could be fairly fast and fairly simple.
Right.
If it's a big number, then yeah, you know, it could be some big analysis.
But I'd say definitely put it down in paper and then
Yeah.
We can have a
they can make
conversation.
this.
So we'll need more information to put a
Yeah.
proposal together
I'll
on that,
email
and it'll help you. But we're happy to help with that. You know, we're gonna be looking at it, obviously, from an audit perspective anyway. But we're happy to help with that implementation if that helps. Compliance, we've mentioned that. I just wanted to refresh your memory. So part of the proposed engagement will include the compliance audit because of the spending of the federal dollars. So that'll be different than it was last year.
The single audit.
So, yeah, we'll be doing that single audit or compliance audit, and so that'll be part of that proposal. And then just, you know, we're gonna propose an increase in fees because of a number of factors, but it's the standards and the time involved with some of the, is the biggest factor, honestly. Some of these new accounting standards are making sure that we're still up to date. You know, it takes longer to audit than it did, so I think overall, we're gonna propose about a 10% increase, which is about $4,000 increase, and I think that's before compliance.
Yeah.
And then there'll be the compliance piece. We're estimating that to cost $5,000. Can you use the federal funds to pay for that?
Yes.
Yeah.
So that piece, that compliance piece of the federal funds we'll propose about $5,000 if I remember right. And you should be able to use those funds if you haven't spent them all. To pay for that piece of it. So anyway, we'll get you a proposed engagement letter. But is there any discussion or questions you want to have with us while we're here on that proposed, or should we just send it to you, let you look at it?
Just go ahead and send it to us right now. I've been happy with the services that you've rendered. Your communication with us, with the different offices, throughout the county, I've been happy with. I feel like we're in good hands, so.
And I would be interested to have you work on it again this next year so you could see the difference between a transition year with everything that you had to go overcome to where we're at this year now. The team has worked together a little bit. I would be curious to see how that works, so.
Okay. No, we appreciate the opportunity, so.
Okay.
That covers
Questions?
everything we had.
That's it for me.
Thank you very much.
Thank
Thanks
you.
for coming down and visiting with us. And Christie, thank you and your team.
Yes, great job.